and welcome to the Courtney Turner Podcast. My guest today is Craig Wenclewicz. Did I pronounce that right? I might have butchered it. We can try it again. Craig Wenclewicz. He'll give me a tutorial. But he has been on the show before, and I am so excited to have him back today. We are going to talk about something that I am definitely not at all an expert on, and he very much is, and I think it's on everybody's mind right now. Maybe not everyone. I know a lot of people are talking about the markets. What's going on with the tariffs that Trump has imposed or proposed, and what is going on, what the impact of that is going to be worldwide and what it's going to mean for the dollar. And some people are saying that this is the Great Reset and that they're, pushing it through. This is the Hail Mary to ensure the Great Reset and push us off the dollar and usher in the CBDCs or some variation of it. And we're going to dive in and see what his thoughts are on that. Is that really the case, or are there other possibilities? Craig, how are you doing today?
Great. Thank you, Courtney. Thanks for having me.
Thanks so much for being here. So let's start with that. What are your thoughts just on, I know we had a dip in the market quite a bit. It was a lot of people were really panicking and thinking this is the end, the market will never recover. I know we had a couple of like Jamie Dimon and I guess several people saying how this is the beginning of a recession, and then they had to retract their words because the market has started to recover already. So, what are your thoughts?
Yeah, so you brought up a few things in there, the dollar and the debt market and the stock market. And so I think most people are, they go to work, they save, they put some money in a 401k, or they have some money in a pension. And so I think everyone gets pretty biased toward the only thing in markets is an up move in stocks, right? So everything's biased toward that one thing. I would say that's predominantly the thought on most people's minds, because whenever we go through these kind of downturns in the market, I get a lot of questions and and then I get the comment, I don't even want to look at my statement. I'm just afraid to look at my statement. And so I think that's the pervasive comment that I get. And every time that the market gets like this, it's the same kind of a feeling, and that feeling of trepidation. They want to ask, but then, and they know intuitively that it's kind of too late to make a move at that point, right? They're like, oh, I should have done something 4 weeks ago, or 2 months ago when I thought about that, I was thinking about it, and that's usually the thing. And so, the one thing we want to do today is kind of just talk about this in terms of there's a lot of different markets out there that people aren't aware of, okay, And so we can do a couple things with that. We can either look at those to see how bad the stock market really is. Okay. How bad is it really cracking? Is it something that we really should be worried about? We can also use those other markets to help us determine, where are levels, right? Like when should we really get scared? Mm-hmm. So I've been through a lot of these, from the Asian currency crisis in 1998, long-term capital management, the NASDAQ bubble, the real estate crisis, and then a series of them through the, 2010, and then the repo crisis. And then, and then obviously we get COVID, and now we're going through this thing. And so I think the big thing is, we can look at a lot of different markets, and for people who have that interest, I think it's worth it, right, to get some sort of a background in other markets like energy markets and bond markets and currency markets. And it may sound a little scary at first, but it's really not that complicated. And what it does, it gives you a sense of calm sometimes, because you're not just focused on how big is it up or how big is it down today. And so it kind of gets us out of that mindset and gets us more in the mindset of, all right, what can I do here that's constructive, and what's my next move, instead of just, kind of settling in a panic mode.
Yeah, I think that's because we're seeing a lot of that. I think, and I think that the media really adds fuel to the fire with that. And I think that's intentional. They're trying to steer things, right, by creating the panic. And of course, when people panic, then they want to sell, they want to get out. And I think that, some of that is intentional. What are your thoughts on that?
Yeah, no, I think that hits the nail on the head, and that it's very intuitive. And so we could peel the layers back on that just a little bit, in the sense that I think the big takeaway on this is that Can you repeat that again real quickly? My mind was on like 10 different things. Can you just?
Yeah, and that there's a lot going on. No problem.
Yeah.
So I was just saying that with the panic, right? I think we're seeing a lot of that, but I think that it's also intentionally being stoked by, especially the media. But of course, also now we've got social media, so the cybernetic algorithms are. But when people panic, what do? They sell and they want to get out, and they're freaking out. And I think that's an intentional push to get people to panic, so that that'll drive it further, or at least that's the effort, the attempt.
Yeah, and that's where I wanted to go with it. Thanks for reminding me that. Okay, so I think that's so intuitive in the media. Like when I was mentioning all those other prior events, right? Those big downturns in the market, the media it's like they're prepared for it, and what you'll see is a lot of times a market sell-off will happen, and then you can almost feel in the back of the media room, they're looking for something to slap on it, a reason. Okay. So I watch the news wires all day long. I've been doing this for 30 years, and I've watched a lot of these things go on. And so the media is definitely, and we talk about this, we've talked about this, on some of the shows we've done before, this kind of globalist concept of, you have the globalists, and then they control the media, they control the news wires, and they just push this whole thing through. And then they create the fear, because what do they want to do? They want to free money up at the bottom, right? They want to get everyone to get afraid and then sell at the bottom. And then they come in and buy, and then you're upset with yourself 6 months later because you're like, oh, there it happened again, And so then they teach us, and here's the most scary thing out of that, Courtney, is that they've sort of trained us to say, oh, don't ever panic anymore, just sit tight because it always comes back. And I think we're getting to this point where, we're getting to a point in time, and we can talk about why little sensory things that I see happening of why this is the case. But we're getting to a point in time where I think that game is sort of over. And I think it's healthy for people to think about, if you want to be in front of the curve, start thinking about some of these other markets and start thinking about maybe, because the markets can do three things. They can go up, they can go down, and then go sideways. And I think the sideways is what confuses people the most when markets go sideways, because they don't know what to do, right? And then the media, so if we're going,
can you just clarify for people what sideways looks like? Because I don't know that everybody is versed in that.
Yeah. So if you look at a stock chart, and we can look at one here in a second if you'd like, we can, if you look at pretty much any chart on the stock market over a long period of time, from the 1980s up or the 1920s after the great crash and to now, it's going to be from the lower left to the upper right, right? That's what you're going to see is this, stock market chart that goes up. But you go through these periods of time, like through the 1970s, okay, after Jimmy Carter, right? We talk about this thing called stagflation, and we're kind of, flirting with that concept again now, where we have a recessionary, a lack of growth, and we have inflation. Okay. And so when we go through those kind of periods, you get a sideways market where it just goes up and down and basically just moves sideways, and it churns, right? The market's churning. And again, and gold did this for a long time, right? It did it into the 1980s, and then we saw this big gold push higher, and then it did it again after that and went sideways. And so these big globalists, right? These big financial operators, they love that because they can go into more sophisticated strategies where they're using option markets and derivatives, and they can again create fear at the top, create fear at the bottom, and they can scare people on both ends. And it forces people to as soon as people start hitting buttons, what does it do? It pushes stocks, it pushes assets back into the market, and they're there to sweep it up, right? That's really what they're trying to do. So again, you can go up, you can go sideways, and you can go down. And really the biggest period that we've had sideways, longer term, like we've been very spoiled in this country. We don't really know what that means because we've seen growth. So we've seen the stock market, it's always grown. And then we get crashes like 1987 or COVID or something like that. And then it bounces back and it just looks like a little blip on the whole thing. But I hate to say that it's different this time, but I really kind of think it is different this time, where we're going from a big kind of a super cycle. We could be going into a period of time where not everything's going to go up. We could have some things going up, some things going down. And that's what can sort of set that sideways churn up. Does that make some sense?
Yes.
Yeah. If you'd like, we can pull a chart up and I can show you what it looks like in the 1970s. All right, let's do that. Okay. Let me flip over here. We'll pull up the, let's
maybe you can tell me, so what is the advantage? Why would the media be encouraging that?
Well, I think sometimes this gets out of their control, and they, so in the 1970s, I think it was a couple of things. Let me go to this. So this is the Dow Jones Industrial Average. Okay. And this goes all the way back into, let me just give you some perspective here. So this right here is, this is the 1980s. All right. Let me get rid of that. Okay, well, we'll just leave that yellow line because that'll work. So we'll just leave that. Not what I intended, but we'll leave it. All right, so what we have here is, okay, so that right there where that yellow vertical line's at, that's 1983. Okay, so let's go back in time here a little bit and we can get a little bit better view of what that looks like. So as we come into that 1983 period, a lot of things happened back then. And, obviously we had Ronald Reagan, okay, comes into office post Jimmy Carter. So you can see here 1960. So this is going to give us I'll just put a box around this. That way we can see this sideways area. So this is like 1963. So let's say, we're in the Kennedy era and we're going all the way up into the Reagan era. Okay. And where that orange box is at, that's basically defining multiple presidencies. Let's say from Kennedy into Reagan. All right. Mm-hmm. And you can see that market went sideways. And that's what I'm talking about, sideways. And people forget about that because, generally speaking, if we back it up, this is what we're used to seeing, right? Is this chart that is essentially the Dow. And that's what we see, lower left to upper right, upward moving market. But if we back up, okay, and we look at that, that's what I'm talking about with the sideways market, right? Where it just goes up and down and it churns and churns and churns until something happens. What happened in 1983? A couple things happened, right? We went from pension systems to 401ks. We went, that was instilled into the marketplace because corporations didn't want the responsibility of a pension so much. So they rolled over to 401ks. That sort of created this stock market boom. It also brought along things like Vanguard. Okay. And then shortly thereafter, BlackRock. And so, and this will lead right into one of the tips, I think, that something to think about, okay, is Vanguard. So we'll keep that in mind. In 1983, we also saw deficit spending, right? Reagan started this whole program of, with Art Laffer and a couple of other economists, they got into this period of time where they were saying, we can deficit spend. And what we'll do is we'll get this, if we can deficit spend and we can produce bigger results from it, then it's worth deficit spending, right? So if it costs us $5 in deficit spending to create $10 in growth, then it's worth it, right? It's a good investment. The problem is that, what happens is we tend to get addicted to that, okay? And then all of a sudden, we run up all this debt and we never come back and we never pay the piper, if that makes any sense, mm-hmm. right? We just get addicted to debt. And that's how we went from, let's just say around $1 trillion, and now we're at 36 trillion. And we have massive amounts of unfunded liabilities. So that's why I think a lot of this is changing. And to circle back to Vanguard, Courtney, one of the things is Vanguard was, anytime you used to type in Vanguard into Google, or you'd see any promotional material, a pamphlet or a booklet or anything on Vanguard, you'd see this chart and how much assets they have under management, right? It was growing like crazy. It looks just like this curve in the Dow. Bigger assets under management, right? Everyone's indexing, right? And indexing means you just pile money into this thing and you set it and forget it, right? You just put money in and you're just betting on the overall economy of the market. And so what I've seen in the last couple of years is, anybody try this. Go and try to look up a chart, assets under management in Vanguard, and you can't find it. That tells me that these globalists, right, they're marketing, right? They wanted to market to us. It was a safe place to go into Vanguard. And now they don't want to show how big they are because there's a bad stigma with the World Economic Forum, Vanguard, BlackRock, these connections. So now you can't find it. You really can't. It's very hard. I look all the time, whenever I'm trying to put something together, for a presentation or whatever, and you just can't find it. So that's one of those like subtle things that's behind the surface. And I know you're very attuned to that because that's what you do, right? You're very attuned to that kind of work and finding those kinds of things. So I am too, to some degree, but on the financial side. So hopefully that makes some sense. Does that kind of help with the concept of sideways and Vanguard and trying to pull some of the concept together on this?
Yeah, no, that definitely helps. So you said you think this time is different. And so what do you mean by that? What do you foresee?
Well, so So central banks tend to fail, right? And currencies tend to fail over time. Okay. Right. And we get into these fiat systems, and kind of like we're talking about with, we run up these massive debts. And how do we do this? Right. Well, what happens is we tend to have a faith in our government, right? We go through a war or something like that. And, and we're kind of down on our luck, right? We're humble. And then our government, we're kind of patriotic or whatever. And so we trust our government. And then what happens is we do this, right? We run up debt. We go through periods like the 1980s, run up massive amounts of debt. The system starts to fail. Okay. And then what do? We don't like public anymore. We don't like the government, right? We don't like these central banks anymore, right? And so what do? We try to get rid of them. And, that's a lot of the rhetoric we see with the Trump administration. We want to get rid of the central bank, right? We want to privatize things more, get it out of the hands of the government, Doge, right? You can see these kind of trends taking place. Yeah. And so we go through these cycles, right? It's just human cycles that take place. From trust to lack of trust, right? From central banks to no central banks, right? And we see these cycles all the time. Same thing in computers. You go from mainframes to small computers, right? Private. And then you go back to the cloud, and then you go back to the phone, right? So it's this constant ebb and flow back and forth. And these cycles just tend to happen over and over and over again. And currencies tend to fail. So there's a lot of things. We're coming to the end of a life cycle on a lot of these things. And unless we, come into some kind of a great reset or some sort of a restructuring of the system that we control, then what we're going to end up with is what we always end up with. We end up with big balance sheets are out of control. And the way they remedy that is they usually tend to remedy that with war, because war can erase the slate. And, we see this with World War II. We see it with World War I. And we can go back in time with Napoleon and the Napoleonic Wars, right? It's this phenomenon they've learned. War's a good thing when you're economically in deep trouble, and they tend to go to war. So unless we get this stuff fixed in another fashion, unless we've gotten smarter, that's probably this kind of cycle we're going into. So I'm not saying it's different that we've never seen before. It's just we've been in this long cycle of 80 to 100 years, this big long-term cycle. And so we haven't seen it. We're not aware of it because it's out of our generational pattern. So now we're moving past it, and it's new to us, but it's nothing new for history.
So do you think that they're going to, it does look like they're trying to push for war. Do you think that that's inevitable? Do you think that there's another way that we can recover without having war?
Well, so that's a great question. And I think if you look at Ukraine and you look at Russia, we know that was really just a big money funnel. Okay. And at least that's my take on it, right? We push all this money through Ukraine. We can go back to, Victoria Nuland and 24, and you've probably talked a lot about that stuff with a lot of, with all your listeners. But we can see Ukraine had been set up for a long time. And then we see all the bioweapons labs going in there. And then we see Burisma, and then we see the Biden family, and we see the Romney family, and, all these families, right? All these supposed politicians making money off this whole thing. And we see paybacks and dirty deals and all this kind of stuff. Well, a lot of people dislike Putin. Okay. But Putin has, and I don't want to get too far into this, but I'm a believer that Yeltsin, right, was set up by our own banking system. All right. And we did a wire transfer to Yeltsin to fix up the Kremlin. They then, as soon as the wire went through, our own, regulatory agencies called it out, got him in trouble. So Yeltsin was in trouble. Not only that, he had health issues, he had some other issues as well. So around that end of the 1990s era, okay, and he was a reformist, around the end of that 1990s era, then we get, he knew he was on his way out. He couldn't survive the political turmoil that from him really probably doing almost nothing wrong, if anything wrong. They were going to take him out, and they had other oligarchs they wanted to plant in there, like Berezovsky, a few other people. Anyway, he chose Putin, got Putin in office, and Putin got reelected. So a lot of people dislike Putin. But if you really look at it, he's really reformed the culture of Russia. The people seem to like him. Is it perfect? No. But the big thing is here, as we fast forward 20 years, NATO has continued to encapsulate Russia. And I think NATO is really the globalist movement. So we see NATO getting weakened. How do we see NATO getting weakened? Well, President Trump has completely bypassed the NATO, right? He's directly unilaterally discussing this war with Putin. Zelensky's almost not even a part of the equation right now. So if you and Europe's on the outside looking into this whole thing. So Europe's sitting there, they want to be a seat at the table because they need to know how to react. They need how to report back to the big banksters and the globalists, but they're not even part of the equation. And Trump, I think, set this up in a lot of ways because he said, I can have this solved in 24 hours if I become president. But clearly you can't solve a war like that in 24 hours. So I almost think he's instigating things to create this unilateral talk and keep these other people out of the equation. So back to your question, can it be averted? I think it's possible, but then we see things popping up in Iran. Well, who's Iran being funded by? Probably by China. Then we see this whole tariff thing come down just yesterday, which I think in my career of watching all these events happen, I think this might be one of the top 5, maybe top 3, maybe even the biggest event of my trading career, which is over 30 years. And I think maybe what we saw yesterday with this tariff situation in China, isolating China, I think it might be one of the biggest events. And again, it's very subtle. And the media is not going to tell you this, but we can break that down if you'd like. But I think what we're seeing is, yes, can we avert the war? I think so. But you have to take these bad actors out of the equation that have always been there, that love war. Why do they love war? Because they make money off of war. They stay in power. They not only stay in power, they gain power out of war.
Absolutely. Yeah, let's talk about the tariffs because that
Okay.
is definitely, I think, again, the media is really hyping this up. It's a great way that they can get both the left and the right to unite on Orange Man Bad. So that has been, I feel like that's kind of part of their strategy. And, regardless of what ends up happening, that's always beneficial for them. So
Yeah.
And that's not to, I'll just caveat by saying it's not that everything Trump is doing that I'm like, rah, rah, I've voiced my criticisms with Trump, but it does look to me like this is an opportunity that they're seizing to stoke the fire against him. Yeah.
Yeah. Well, and it's so funny you say that because, So I use these things called harmonics, right? And what I do is I use these structures, and then what I do is I listen to the news, and then I try to attach the news back to those structures. And I think that's a little bit different than what most people do. Most people look at the news, and then they try to figure out what to do. The problem is, by the time you get the news, it's usually been absorbed in markets, right? So if you want to be out front of it, you have to do something a little bit different. So the key is to be watching the news as it unfolds and try to have these structures. Now, why do I say all that stuff? Well, going back to Trump, and what he's doing here with, these tariffs, I think he set this whole situation up, okay, because back to the war and trying to pull this whole concept together is that if we're going to avoid the war, one of the things we have to do is we have to stop the bleeding, okay? We got to plug the holes in the bathtub, right? We're bleeding out, we're hemorrhaging money. Okay. And so we got to plug the holes. How do we do that? Well, one way is to stop this theft, right? That Trump claims that we have. And we do. We run current account deficits, trade deficits, and not to because this stuff gets kind of complicated. But the key is we take in, like, for instance, with China, right? We buy a lot of, cheaper product from them, and then we sell back a lot of services, right? Now, it's not enough to compensate, and we become addicted to these cheap goods. All right. So when we're trying to remedy this situation between, this trade deficit that we run, one of the things to do is to say, are we being treated fairly here? Is the playing field fair? And if it's not fair, then how do we level the playing field? And each country is different, okay? Because each country has different resources, different culture, different goods, or some of them are more product-based, some of them are manufacturing, some of them are more agricultural, some of them are more service-based. So every country is different. So you have to deal with each country differently. And Trump was a little scary there when he was just slapping these tariffs on everyone, okay? And he was really stoking the fires. And I called it, he was just creating a big stir, right? Just stir it all up. And then what we'll do is we'll just walk down the road and we'll see what opportunities present themselves. And then we'll invite people to come in to this little, crazy party that we started to throw with all these tariffs and all this stuff, this chaos that we've created. And then we'll see if we can't settle everything. And that's where it looked like it was going. And the media have just fed on this, Courtney. The Bloomberg, CNBC, they just feed on this, right? I mean, one of the things I ran last week, a clip of, the CNBC morning show, they were laughing, they're sitting there saying, yeah, but he's burning down the house to cook a steak, and they just go on and on and on with these things, right? It's this typical thing, and again, we know CNBC's controlled, by their parent company and this, and then we also know that Bloomberg's controlled, Michael Bloomberg and, his whole connections there. So you can't really trust them. Even though you have to listen to them, you can't really trust them. It's almost like, you wish you could find another way, but look, they have the data, right? I mean, Bloomberg controls the data system. You're almost. So again, all we can do is keep our heads clear and make sure that we're understanding what's going on instead of getting propagandized and biased by all that information. It's good information if you just know what not to listen or what to, if your mind's clear, you can say that's garbage, right? And this is truth. And so you're always trying to sort out the truth, right? Yeah. Does that make sense?
Yeah. Discernment.
And so I guess the takeaway on that is, well, go ahead. I'll just leave it at that. I'll let you pick it up from there.
Okay. Yeah. Well, I had said to you, because we had talked about this a little bit before we pressed record, but the strategy of just kind of like throwing darts and creating some chaos is very entrepreneurial. I had somebody once tell me that, most people go through life, aiming and then they fire. And entrepreneurialism is really about firing and then you aim. You have to, and really that's just you refine things as you go along. But if you don't start firing everywhere, you don't know. Nothing happens, nothing mobilizes. And I know that's not necessarily a strategy that people want to see, in terms of dealing with geopolitics and world finances. But I think that's kind of how he operates. And I do think something did need to be ignited, because I think that the path that we were on is, was headed in not a great place. So I do think my hope is that some manufacturing would be brought back here, because as you said, we're kind of now addicted to these cheap goods. And, I look at things from kind of a historical lens, and I know that before the 16th Amendment, we didn't have income taxes. And what did they do before that? They created the Tariff Act, which is kind of misleading because it actually got rid of the tariffs. And they had to propagandize the country. It was Edward Bernays and Walter Lippmann who were very instrumental in that propaganda. And part of what they sold Americans on was that we need free trade. And I think people heard free trade and they're thinking like free enterprise, laissez-faire economics. But that's not really what it meant. What it really meant is that now you're going to have cheap slave labor. At the time, this was really geared more towards the East Indian British Company, and slave labor, I mean, essentially an indentured servitude. It's very low wages and they're mass scale production. And then we can sell goods for, here that we import very cheap. But now, of course, that's much more directed in terms of our relations with China. It's that kind of labor that they call like the sweatshop type of.
Right.
Yeah. And so we've really lost so much manufacturing because we are addicted to that. And I think that makes us, it's not a good situation. They're very dependent on us, although people are talking about the tariffs. And this is also, I'm curious your thoughts on it, but it does sound like another media talking point. But I'm hearing them say, a lot of people say how this is an opportunity. Now, this is going to implement the Great Reset. We're going to have, China and BRICS are going to rise. The United States is going to be done. We're going to fall. But it does seem like China is kind of dependent on us quite a bit as well, because we buy, I think it's like 40% of, their products. So that's a large share. And then people are telling me, well, no, they have other markets now. They might. A lot of those markets don't have a whole lot of money as far as I can see. So I don't know. To me, it doesn't look like, I know they're not going, as you said, like they're, not going to just fold, but some of the other countries have come back and negotiated, which I think is what Trump was counting on, that they would come to the table and negotiate. And cover any other of that you'd like to address.
Yeah. Well, so I think what was going on was there was again, we created this big stir with just across the board tariffs. And then you know that the two key targets are going to be China and Europe.
Right.
But the problem is you can't really just go out and say we're going to put tariffs on Europe and we're going to put tariffs on China, because now all of a sudden there's a chance that other countries could unite around Europe, like we saw with Canada, right? We saw Mark Carney starting to unite with Europe as soon as Trump started to attack Canada.
Right.
And we know Mark Carney is a globalist type, right? You know, he was head of the Bank of England, Bank of Canada, right? He's definitely tied in tight with the IMF, the International Monetary Fund. And now didn't really get voted in as the PM of Canada, but he took Justin Trudeau's place, right? So it's very sketchy. And so what Trump said is he warned him. He said, look, I don't want to see Canada and Europe teaming up, or else I'm going to slap you with even harder tariffs. He did the same thing with China. He said, if you don't retaliate, okay, we can sit down and we can negotiate, right? That was kind of the rhetoric last week and a little bit this week. Mm-hmm. And then what we see yesterday was a pretty big situation where, you know, we see China just, Trump comes out and puts 34% tariffs. And then the next thing you know, it gets ramped up. And then next thing you know, it's at 104% tariffs. And then China comes back and they're at like 84% tariffs. And then, you know, so we're in this tariff war that the media was all hyping, right? All these people are saying, this is where we're going to go. We're going to end up in this tariff war. And so everybody I like to call it going to one side of the ship, right? In the markets, everybody moves to one side of the ship. And then someone realizes, wait a minute, maybe I should move back to the other side. And then everybody runs back to the other side of the ship. And it was the same kind of thing that was happening here. The media was biting into this hook, line, and sinker. Everybody was biting into this. And then in the end, right, yesterday, midday or in the morning, they come out and they release this tweet, okay? And we see the market just go flying higher. Why is that? Because they basically put a pause on all the tariffs on 75 countries that got caught up in this thing. But they kept them on China because why? Because they were retaliating. That's who Trump wanted to get to anyway. But what we saw was what they exposed, I think, was that China's been a bad actor for a long time. And if you don't expose it, then what happens is maybe some countries side with China. And that would have been the biggest fear, I think, Courtney, is that with all this aggression in terms of tariffs that we saw with Trump, and Trump's not afraid. I mean, this guy's got broad shoulders. He's not afraid to carry all the controversy and turmoil. It doesn't seem to bother him at all. Right. And so when this was going on, you know, the media was attacking him. Everyone was attacking him. And then all of a sudden, you know, you couldn't have put tariffs on China without going through a process like this. And you needed to expose China, because if you didn't, then maybe you get India and you get Japan. Okay. And again, Japan and China don't get along, right? They're not culturally real happy with each other, you know, from prior wars and things like that. But if you put the pressure on them so hard that they don't have a choice, now enemies become friends because the pressure's so hard on them. Now you get India and you get China, you get Japan, and maybe South Korea even joins the whole thing, right? That was the big fear, I think, at least in my mind. If you push too hard, you can actually create, you know, friends can become enemies because they team up with other enemies. And now you have this problem, and all these countries hold a lot of our debt. And if they started to sell our debt, okay, then what happens? Now all of a sudden interest rates start to rise. And we carry all this debt and rising interest rates on a big, massive amount of debt that we carry, the 36 trillion in debt. It could push our economy off a cliff and we would fall apart. So we're really in a game of chicken here. You know, it's a game of chicken. And I think as of yesterday, Trump really won because, one, he exposed China as being a bad actor. Okay. And he didn't let this whole situation form. And what we see today is 75 countries are now leapfrogging each other to get to the White House to negotiate their deal and get this off their back. Right. Yeah. So I would say, you know, huge victory for President Trump and this administration from that sense that China is weakened. They didn't form a coalition. Okay. And they've been exposed. And now we can negotiate. We got a 90-day pause, and there's 75 countries. It's going to take a couple days to negotiate each one of these, if not longer. So now the window's set to go through all this stuff. Now, in the meantime, I think Trump's going to at some point have to lend an olive branch to President Xi, right? And that's because if not, other bad things can happen, right?
Right. Sure. Yeah. No, they need to know how to save face. So he needs to present
Yeah,
the opportunity.
exactly.
So I know we have a couple of clips. Do you want to
Yeah.
play any of them and talk about them? Yeah.
Yeah, let's roll through some of these. So the first one we have is, so this is Scott Bessent, okay? And Scott Bessent worked for Soros, not just once, but twice. Okay, so he worked with him early on, then he left. Okay, and then he came back to Soros Management. So he's made George Soros probably somewhere in the neighborhood of 10 to $20 billion. Okay, he and a few others, Stan Druckenmiller and a few of these groups. Now, Scott Bessent was a guy who calculated a lot of the stuff that they needed to take down the British pound when Soros, if you know George Soros and anything about, the 1980s when they attacked the British pound, Scott Bessent was in on that whole, right? He was young and he was kind of the mathematician. He was in on that whole thing with Stan Druckenmiller and the whole group. Now, he left, came back. And then not only that, when he started up, I think it's Key Square Capital is the company that he was running before he became the Secretary of Treasury. Guess who funded that Key Square? George Soros. So he's got very strong ties to George Soros. Now, so the big question was when he was getting to be selected as Treasury Secretary, is this guy, whose side is this guy on? Is he on the side of the good guys or the bad guys? Now, this is him talking about the fixed income market. So this is the debt market. We talked about stock markets, debt market. We've got energy markets, metals markets, commodities markets, all these different types of markets. But this is actually talking about the debt market. And so we can go ahead and run this one. And he's talking about the income, the duress on the fixed income market.
Watch this.
There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market, and I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up. Then,
okay. So did anything strike you, or do you want me to just keep rolling with that one?
You can roll. Yeah.
Okay. Okay. So what he's talking about there is kind of with the stock market. All right. So synonymous with the stock market, what happens is we get into these periods of time where everything's calm, right? The waters on the sea are calm. Mm-hmm. And what happens? Hedge funds, people, we all get kind of happy, everything's good, a little bit lazy, and what we start piling into, things like the AI, the tech stocks, right? Because it's an easy ride, right? You buy NVIDIA and it goes up $100 one day and $20 the next and up $100, right? So you get these massive moves that occur really quickly. And then you get things like, and then in the bond market, we get a similar type of situation, right? We get, not to get too detailed here, but we get what are called spreads between markets. So you got junk debt and then you have high quality debt. Okay. And what happens is a spread comes in between those two, and the junk actually gets better treatment than it should. And it gets almost treated like the good debt, right? So that spread comes in and the bad debt gets treated a lot like the good debt. And there's not much of a spread between the two when the waters are calm. All of a sudden, when things get volatile, what happens? People say, I don't want that junk. And now they've got to sell it. The problem is there's no one to buy it. Okay. So we look at these debt markets to give us those sign point, those signals to the stock market. How bad is the stock market? And what he's basically saying there is this is normal, liquidation in the debt market. We don't have to worry that much, right? The stock market, nothing to really worry about in these other markets, right? We're using these other markets as indicators. Now, here's is going to circle back. This is Scott Bessent again talking about the currency, right? So this is our next clip. And he's talking about China using their currency. And hopefully this resonates with you, but for me as a trader, like this, if I were sitting on the China side of things, I'd be sick to my stomach listening to how China's using their currency for kind of a cheap thrill and not really a long-term solution. So we can go ahead and roll this one.
I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories, the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset.
Wow.
Right. So, yeah, go ahead.
Well, yeah. I didn't realize they were using their currency as a trade tool. And yeah, that doesn't seem we think of China as being very good, like long-term strategists, and that doesn't seem like a great long-term kind of strategy at all. Are they just thinking BRICS is going to save them, and so it doesn't matter? What's the thought process there? What do you think?
Yeah, so what people don't realize is China's been struggling for quite some time. For about 5 years, their economy's been down, their stock market's been down, and they've been doing a lot of things that they don't feel comfortable with, but they've been sort of growing into the uncomfortable in a bad way, right? They've been doing a lot of stimulus programs. And in the fall, we saw massive, we've heard it here to use before, the bazooka, right? During 2008, you might ring a bell, right? Bring out the bazooka, which is the Federal Reserve, the Treasury, right? And just fire away, buy up all the junk nobody wants and clean up the system, right? But are you really cleaning up the system? That's a similar thing to what China was doing, right? They came out with this big stimulus program in the fall. So mid to late 2024, they started with these stimulus programs to try to stimulate their stock market. Because here's the thing with China. They need foreign direct investment, right? They need other countries, other investment firms, right? Pension systems, hedge funds, asset managers of any type to come in and basically, lend money to China because they don't have, their system isn't as robust. What are they? Generally speaking, they make products. So someone says, hey, we want you to make this product. And then they make it cheap, and then they just ship it off, right? And this goes back to Kissinger, Brzezinski, Bill Barr, Old Man Bush, right? Setting up this whole thing with, and what they did is they used Hong Kong, right? They used the legal system in Hong Kong to basically bridge from Eastern legal system to Western legal system. And then we get this situation that builds over time, okay? And all China really becomes is a kind of a cheap producer, and they don't have that consumer to make.
The Kissinger rapprochement deal. Yeah. Sorry.
Yeah. And so that's kind of where China's at. They're sort of in a bad spot. And if they lose this ability to sell stuff around the world, now we talk about steel, they've destroyed the steel market, right? Korea used to be a big steel producer. Europe actually used to be a decent steel producer. In France, some of South America. Well, what does China do? When times get tough, they just overproduce steel because it's government subsidized. And now they just dump it right on the market. And when they dump it in Korea and they dump it in Europe and they dump it in the US, what does it do? It destroys everybody's steel market. And now people have to move other places. So the more dynamic economies will adjust, the less dynamic economies get devastated by that kind of stuff. So China's been a bad actor. There's a lot of countries out there who aren't real happy with China. So again, when we see Trump exposing, the actions of China over the last couple of days of ramping up these tariffs, it sort of exposes to the world how bad of an actor China is. And where do they fit in the global picture? And do you really want to be associated with them? So China really lost in the last couple of days. I mean, Trump really pulled a number on them. And that's why I say this is one of the biggest events in my 30 plus year trading career, in my opinion, right? At this point in time, it's one of the top 5, if not maybe the biggest event.
Yeah, it certainly sounds like it. The whole joke that he's playing 10D chess. I don't know that he predicted it would work out this way, but if he did, then it definitely is kind of a 10D chess move. So with their with the currency, what do you think the impact of that is going to be?
So
and why
are
they willing to do that? Yeah.
Well, so China, it's a little complicated. China has a weird operation. They actually have 2 currencies. They have an internal currency and an external currency. The renminbi and the yuan. And this goes, and you've brought up BRICS a couple times, and so the one of the big problems with BRICS was that, Brazil, Russia, India, China, and South Africa, those are the key ones. And then we had a few others pile on in the last, before pre-Trump, right? BRICS was sort of gaining some momentum. But the problem with it was there was never a currency that was really trusted. Out of all those actors, you couldn't go to Russia because they were under sanctions, right? You couldn't really go to Brazil, their currency wasn't stable. Mm-hmm. India, their currency's at all-time lows, and it was already falling back then in the fall. And then you go to South Africa. I mean, they're a great commodity producer, right? But you can't lean on South Africa for your currency. So then they talked about this digital currency, right? They were going to put some form of a digital currency together and back it with metals and other things, right? There was a lot of, but nothing. And then, Putin had everyone come to, I think, Kazan, Russia, and they talked about this and they tried to put it together, but it just never had any, they could never get over the issues internally. Again, why is that? Different cultures, right? And again, this was the risk of these tariffs, that if you push these people far enough, they will be forced to accept one of the currencies. The problem is, could it ever really be the renminbi and the yuan? And so the currency is not trusted, right? Nobody transacts in the global world. Nobody trusts the Chinese currency, right? The renminbi. So it doesn't work. And what they're doing is they're just trying to play games, Courtney. I think it shows the desperation level there, right? Is that they're really trying to make something out of nothing, if that makes sense.
Mm-hmm. Yeah, no, it definitely does.
And the more they devalue the currency, the more it hurts them. Because think about this. If you're in the U.S., right, and your dollar is going up or staying stable, and, the Chinese currency is dropping, what does that allow U.S. citizens to do? You can now, your dollar actually goes further in China, so you can buy more stuff. All that does is weakens their economy, their consumer system, and their workers, their people. And now they're saying, wait a minute, what is going to happen? If that's the case, they're going to have to lower wages, right? Because they just can't afford to pay that, or they have to subsidize it with the government. What does that lead to? It leads back to more subsidies, more programs, more stimulation. So it's this vicious cycle that they get in. And I think they're at the end of that cycle. And I think the timing of Trump putting the pressure on them with these tariffs was actually very either fortunate or 5-6D chess. I don't know. All I know is the timing lined up, and China's in big trouble right now. That's the problem. That's the real takeaway.
Yeah, which is the opposite of the narrative that I keep hearing. I knew that their economy was not nearly as robust as they keep reporting, but the narrative that I've been hearing is that what Trump is doing is going to bolster China, and that they're in such a good position because all these countries are now going to replace us in the market, and that it's going to be the rise of China and the end of the U.S. So, but it doesn't sound like it at all.
When it sort of fits, I guess you have to challenge it because, again, back to Kissinger, Brzezinski, Bill Barr, Old Man Bush, right? The whole operation. This is that new world order, right? We have to think that there's some connection here between China and the new world order, right? And that China was going to be a manufacturing system for their new world order system, okay? And they were going to use and abuse them like they have so many other countries throughout the world. Yep. And they would have used and abused ours too. So again, if they control the narrative channels, that is what we're going to hear back. So again, that's why you do what you do. That's what I do is to sort out the truth and try to bring it to people. So again, if we understand the narrative and we understand what's going on, they're powerless. That's the thing, right?
Yes. Because I think the narrative feeds into their goals and their agenda. That's what they want to see happen. I think the more people that buy into it, the more likely it will be successful. As you just pointed out, like we built China. That was the whole Kissinger and Barr plan. So, yeah, they would not have, although they might not be in as strong a position as that they show, that the media shows us, they wouldn't be in a position at all if we didn't prop them up. So,
yep.
Yeah.
Yeah, that's right.
Do you want to play some of the others? Go through?
Yeah, let's roll this one. So this is actually Trump, okay, talking about the bond market. And this guy, we were talking before the show about how funny this guy is. Whether you love him or hate him, you can't deny this guy's funny. And so here's him talking about this. You're not going to be surprised by his comments. This is him replying about the bond market. So we can go ahead and roll this one.
No, I was watching the bond market. The bond market is very tricky. I was watching it, but if you look at it now, it's It's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day. We had Liberation Day in America. We're liberated from all of the horrible deals that were made, all of the horrible trade deals that were made. And I was helped by people just like.
It's beautiful. It's a piece of art. Beautiful. So I'm sure you have things you want to chime in on, but I do want to, before I forget, when you talk about Liberation Day, so of course this is the ERS, right? The External Revenue Service, which is the tariffs. And there's been a lot of speculation about what's going to happen with the IRS. And of course, we just talked about a little while ago how that was only created because they got rid of the tariff. So there are people saying that, there's noise that we might be getting rid of or decreasing the, I know they've already done some decreasing of the IRS, but, would they be a move towards getting rid of it altogether or very significantly reducing? Now, I know the flip side of it is there's, of course, people saying, well, they're going to replace it all with AI. But, I think there's a tendency to be very either it's black and white, right? Like either very hopium driven or very black pill driven. It's right. It's a white or the black pill. And people, when you're in that mindset, it's like you miss all the opportunities along the way. Because even if, let's just hypothetically say that he were to get rid of the IRS, we were to get rid of the income tax altogether and go back to a predominantly tariff and manufacturing infrastructure, then even if the plan is to usher in the AI and have that be the replacement system, you would think that there's some, ingenuity of people, of humans in the meantime, where people could have some agency to be disruptors and innovators, so that that there's not just like a predestined outcome is, I guess, what I'm trying to say, that there could be opportunities along the way. So I'm curious your thoughts on that. And then, whatever you wanted to comment on the video also.
Yeah. Well, I think you're right. And I was going to see if I could get this. I had a chart up here. Let me see if I can get this real quickly, if this will actually come over. Yeah. So this will work. Is that showing up for you guys?
Yeah.
Okay, so this is actual federal revenue by type. Okay, so if we look at this, this is going all the way back into basically when our country was formed, all the way on the left-hand side, right? That's like 1792. And all that whole distance until you see the red, right? That's in 1911, 13, 14, when the Federal Reserve started to come online. So the gold, all that is tariff or excise taxes. And then we get into, obviously the central bank, and then sure enough, they have to create, the taxation system, right? Because that's all part of the scam. It's all part of this whole system that needs to be set up. And you can see the red starting to climb, and the yellow continues to climb too, right? And then that's the tariffs, and the red's the income tax. And then the gray is the payroll tax. So the question here is, as we bleed out, right? And we, run up these debts and we continue to spend money on things, and a couple of things we need to do, right? It's either, can we plug the holes in the boat? Okay. One, the fraud, okay, that was going off into these money funnels, right, that we see with USAID and all these other things. Two, can we clean up other things with Doge? And that's kind of, sometimes those are together, right? The Doge and so it's all about stopping the bleeding. And then can we increase the revenues, right? And so that goes a little bit back into the revenue system. And how are we going to generate these revenues? We talk about, this gets complicated, but the big takeaway that I'm hearing from a lot of people that I respect is energy, right? Energy is going to be at the core of all this. And again, we look at coal. Okay, coal's coming back. We saw Europe, right? Europe, again, this is part of the problem with Europe. Europe made a really bad investment with this whole climate change thing, right? They put a lot of money into solar. They put a lot of money into wind, right? And it's all flopping. And so is the DEI, the diversity, equity, inclusion. So all this stuff just completely rolled over when President Trump came into office. And then what we see is, how are they going to, so again, back to coal. We're seeing all these coal power plants. We're seeing nuclear, right? We're seeing natural gas is getting huge, right? Natural gas. And so this kind of